Hello traders, welcome back to the WillssFX YouTube channel. Today I'm going to talk about how you can manage your emotions during your trading. How you can stop closing your trades too early in drawdown, stop closing them too early before it hits your take profit, and pretty much how you can improve your psychology and your mindset during your actual trading. Firstly, I'd say a lot of people actually struggle with the psychology part of trading. They think it's the technicals, they think it's their strategy that's actually not working. But I'd say like 8 to 9 times out of 10, it's mostly the psychology that's holding them back. And I'd say it is the hardest part to actually improve your trading too, because it's not like if it was a technical problem, you just need to amend your strategy, amend your confidences, maybe do a bit more back testing. But the actual psychology side of it, the best way to actually improve it is through experience. It's like, let's say you're a footballer, you play really well in training, but when it comes to a match, the pressure gets to you, you're actually in that live situation, and then you can't really perform to the same standard which you were in training. Same thing with trading. If you're back testing or on demo accounts, you might be absolutely perfect, making all the right trades. But when it comes to that live account, when it comes to that funded challenge, you like crumble under the pressure, and then the psychology is just not there as it would be on a normal demo account. The best way to actually overcome this is to think and trade like a robot. So let's say you have a trading robot, it places the trades no matter what. If the plan is there, the parameters it's actually been set to do are there and they've been met, it will enter the trade. And this is kind of what you have to think like when you're actually trading. You don't want to think, I don't think this trade is going to work. All the confidences, my whole plan fits this trade, but you don't personally think that it's going to work. So you don't enter, that trade hits TP, you've missed out on 5% profit, let's say. So you kind of got to think, okay, my plan's there for a reason. I've back tested hundreds of trades, spent hours and hours looking at the markets of this strategy, but then when it actually comes to it, you don't enter. You've got to think, well, what have I done all that work for? Why have I put all the hours in if I'm not going to actually enter when the setup actually happens in the markets? A lot of people actually fail when it comes to their psychology when they're actually in a trade as well. So that, as I mentioned before, some people just can't pull the trigger, they can't actually enter the trade, and then they miss the opportunities. But one of the most common things is actually people not managing their trade properly. Obviously, everyone's going to manage their trades differently because everyone has a different trading plan. Everyone's going to want to take profits at a different level, maybe take partials at a different level. But I'd say overall, a lot of people definitely close their trades too early. And I just think of it like, your take profit is there for a reason. If you're targeting that certain area, it's there for a reason. You wouldn't just put your take profit in a random place, because then there's pretty much no point in having a take profit if you're just going to close randomly. So you've got to think, okay, my take profit's here, price is rejecting on the way to the take profit. I mean, what do you expect? Do you expect price to just go straight to the take profit? That's not really going to happen. A lot of the times in trading, you do get some consolidation. As you see on the charts here, I have actually made them black. So if you've probably seen a few of my videos before, trading with these black charts definitely does help. So let's say you've sold at this area and you were targeting this area. For the example, you're going down nicely in profit, but oh no, you get a nice little pullback, or even this wick here, you get the pullback up. You've seen that profit, you've maybe seen 3% profit, but now you're only up 1% in profit. So you're thinking, well, what if this trade stops me out now? I've missed out on 3% profit. A good trader would say, okay, we're getting a slight pullback. If we break this certain level, I'll get out of the trade. I'll manage my trade, I'll manage the risk. But a lot of people would just trade using their emotions and not thinking straight. So they'd be like, okay, we're pulling back now, I might as well just take my profit. But let's say when price actually made this pullback, you took your profit, and then price continued down to your TP, you'd feel even worse probably than if it hit stop loss. If it hit stop loss, the trade wasn't valid, you probably shouldn't have taken that setup. If it hit TP after you closed early, well, you've missed out on 5% profit, 6% profit even. So you kind of got to weigh it up. Okay, I've done hours and hours of back testing. My trades, I know my win rate. I know how many trades I'm going to win in a month, in a year. Obviously you can't get exactly, but from your back testing and live forward testing, you can kind of get a rough idea of how many trades you're going to win and lose in a row. And then you've got to think, okay, we're dropping down, we're in profit already, my target is there, for a reason. You know, you should always target areas which you see price reversing from, in my opinion. There's no point targeting somewhere where you don't think price is going to reverse from. If you see price going further, why wouldn't you just target further? You know, it kind of makes sense. But definitely using these black charts, you know, it doesn't really matter about the background color, the candle color, but I'd say as long as it is a single color, then it definitely does help your trading. You know, if we could make this, I don't know, light gray, and then you kind of still have the same sort of thing. You don't have that emotions attached to the candle color. A lot of people, they're selling, they see nice red candles, lovely times, you get this big bullish green candle. Oh no, the trade's reversing. That's what people think when they see, you know, the green and red. It's kind of programmed in your mind. Red is a loss, green is, you know, good. I know with MT4 it's blue that's good, but general investing, green is seen as, you know, profitable. So you kind of want to get out of this mindset of this candle means this candle means that, and you kind of want to stay in the mindset that based on the technicals only, based on the plan that I have written out for my trades, for my executions, this is what I'm going to do. If this happens in the trade, this is what I'm going to do. If this happens before I enter the trade, I'm not going to enter. If this happens, I'm going to enter. So you kind of need to have these rules laid out before you actually even get into a trade. Before you've even taken your first live trade, you should know kind of, if this trade comes to this level and rejects, I'm going to maybe close a certain percentage, make it risk-free, and then just let the rest run pretty much. So you kind of need to have this idea of, you know what's going to happen, you know how much you're willing to lose, you know how much you're going to make if this trade works out, and then that can definitely boost your trading. Another thing people do is they think of it in terms of money. So if you're actually chasing money in trading or in anything really, you are going to fail. If you don't actually have a passion for it, if you don't actually enjoy doing it, then you probably won't see the results of someone that, you know, loves spending hours and hours learning the charts, watching videos, back testing, writing notes. You're just not going to have the same sort of results, in my opinion. Obviously there are certain people that just have the talent and they can just trade, but at the end of the day, the people that work the hardest will always get the best results. And I believe that pretty much in any industry, especially in like sports and stuff, people that train the hardest are obviously better than the people that slack on their training. Maybe they take a day off and that sort of thing. People that are always there, always willing to learn from anyone, they're the ones that will succeed. You know, especially in trading, you can learn from pretty much anyone. Even losing traders you can learn from. I'm not obviously saying learn from a losing trader, because that's pretty much pointless, but there obviously are lessons which you can learn from them. No trader has it all. Losing a couple trades makes you a bad trader. Obviously not true, because you just look at it in terms of the money. Let's say you lost £300, you think, oh no, I've got to make that £300 back. If you look at it in terms of your account balance, let's say it's a 10k account, well, you've only lost 3%. If you've got a good risk to reward in your trades, that £300 you've lost, which let's say could be your weekly salary, or one trade, 1 to 3, and you're at break even. 1 to 4, you're back in profit. A 1 to 5, well, you're up 2%. So you kind of got to view it in terms of percentage, in terms of, you know, the risk to reward, and not get, you know, caught up on the money aspect of your trading, because it will pretty much ruin your psychology. You always want to make more profit. You always want to catch more pips, and obviously that equals more money. I've seen a lot of people, and this is what I used to do in the past, you know, I'd say like the start of last year, I was kind of doing the same sort of thing, is when I get greedy with my trades. I'd be in the trade, I'd be up, let's say 3 grand, and then I'd remove my TP, and then I'd just let price run, and I'd be like, oh, I want 5 grand from this trade, and I'd only close if it got to 5 grand. But then it'd reverse, hit my stop loss at break even, and I'd make absolutely nothing. However, that TP I actually placed of where I thought price was going to reverse from actually hit and rejected. However, I was thinking, I want more profit. I'm already at 3 grand, why can't I get 5 grand? The realization I made was, the markets don't care how much money you're up. The markets are there. You can do your technical analysis, and then you can kind of think, what is the probability I make profit of this trade? And that's how risk to reward pretty much works, and win rate. So I'm kind of getting caught up, moving my TP, or even removing it altogether, not taking profits when I should, that fits my plan, and kind of just going against all my trading rules. And the way to go around this is just set and forget. Obviously, I'm not saying just set your limits and then just go out and never check the trade again, because obviously how you can know if you hit TP, if you hit SL, you know, you might be stopped out by a pip, and this is why alerts definitely come into it. So let's say I was looking to buy down here. What I do is I set an alert. Now if price comes down to this level, I can go about my day now. Let's say I want to go into the gym. As long as you have your phone with you, you get an alert on your phone, and then you can kind of say, okay, price is in this sort of area now. I can maybe look at the charts and see if I need to manage my trade, or if my trade's getting stopped out, my trade's hitting the take profit, and you can kind of manage it like that. So I always put my alerts near my stop loss, so I can see, you know, if I'm getting stopped out, because I want to know, near my TP, and then near certain areas of significance in the markets, where you'd want to actually check the charts. If this video did help you guys, be sure to like, subscribe, comment down below future video ideas, and I'll catch you guys next time.